Let's take the conversation forward with Rishi Raj, COO of Max Estates. It's an NCR-based, North-based real estate company concentrated in Noida, and now they've expanded their operations even in Gurugram.
Hi, Nikunj.
Good morning. How are things?
Good morning. Great, Nikunj. Good to be back on your show.
We've seen a vertical rise in NCR region. Gurgaon being the highest, followed by parts of Noida. How much of the price appreciation is real deal, and it is here to stay?
So, Nikunj, post-COVID, uh, we have been saying it has been a golden era for real estate, and I firmly believe in that. Not only residential, commercial has done extremely well. From here onwards, I think we are very positive, particularly for corporate and institutional developers. And let me share with you, uh, uh, particularly in NCR, what are we seeing on multiple parameters, including price, the question that you asked. In my personal view, uh, this is going to be positive for institutional and corporate developer, but what we are going to see is a bit of a K phenomena, particularly in NCR, where over last couple of years, some distortions have emerged. And not many people talk about it, but for your audience, let me give you some insights. First, if you look at the concentration of launches in Delhi NCR, if you take luxury and ultra luxury segment 1.5 crores and above, it is 82% versus pan India 25. If you take 2.5 crores and above, in Delhi NCR, it is 68% versus pan India of 13%. So this is one distortion which is going to get corrected. This launch has to be more spread out, and few players who are able to really deliver justice with luxury from a value proposition perspective will stay there. Rest will need to move out or spread out their game into other segments. Number one. Number two, price, something very interesting has happened. If you look pre-COVID, in the same micro market in Gurgaon, whether you take Dwarka Expressway as an example, there was 2x difference in the price of, if I may say, corporate, institutional, listed developers and rest. Post-COVID, in this upswing, 30 to 40 developers have come in with the new launches, and everybody was trying to price it in the range of 15, 16, 20,000 rupees. Our belief is the price dispersion will come back. Third, velocity. I think velocity has been very, very strong. We, as you would be aware, we recently launched Estate 360 after a very successful launch of Estate 128 in Noida last year, which was 100% sold at the launch at unprecedented price levels. Estate 360, which is intergenerational product of Delhi NCR, we made a booking value of 4,100 crore against a guidance of 4,000 crore, and we got a spectacular response. I think over next 12 to 18 months, I think we will all need to embrace with moderation in velocity, I would say. For some, the launches will continue to be strong, who have a clear value proposition and product differentiation. And for some, this will get spread out over the project life cycle. So the key is be ready for launch and sustenance model and not 100% sold at the launch. So those are few things I just wanted to quickly share about what we are seeing in Delhi NCR.
Why would prices sustain at these levels? I have a simple follow-up question on that.
Look, if you, I think what you will need to do, Nikunj, instead of looking at what has happened over last 2 years, please look at the long-term trend. If you take last 10 years, right, where between 2010 to 18, 19, prices were almost stagnant. If you look at last 10 years, the increase will be in reasonable single digit. If you look at affordability quotient, despite these increases in price, affordability quotient are at a very, very comfortable and reasonable levels. So because of these reasons, uh, uh, particularly I'm saying for developers uh, who are bringing product which is customized to the right target segment with clear product quality and experience-based differentiation, the prices will stick and will grow from here. But as I said, this phenomena of price dispersion which got vanished, which will come back, and we are already seeing that with some of the players in the market.
Specifically, the area which you represent, which is ultra luxury and luxury, could trends be different from rest of the market there? Because the general feeling is that okay, Indians are getting richer and they want more and better apartments, so luxury will do much better than what the real economy does, and it will be the best performing subsector within the real estate sector.
I don't think so. As I said, if you look at Delhi NCR, Nikunj, 82% in premium luxury, ultra luxury, or 68% in luxury, ultra luxury. This continuing and affordable being or mid segment being in single or low double digit, I don't think this is sustainable. I think this will get spread out. What really is going to be differentiator is three things: people who are playing in luxury and ultra luxury, getting the right location, the product quality, which is really customized to the target segment, and I'll talk about that in a second, and which is really end user experience driven and not just to do lip service to end user experience, but you have a track record of delivering that. That's what will continue to sell, and demand for that kind of product will continue. Let me just come back a little bit on product market segment, Nikunj. uh, I think what has happened over last couple of years, one size fit all product came to the market, all concentrated in that luxury, ultra luxury segment. I think what we will all need to do is segment the market as we did in case of Estate 360. We actually catered to two very distinct market segment. This has got one third of Estate 360 has a senior living residences. So we customized the product for senior living with respect to the product as well as the ecosystem of amenities, which is coexisting in the larger ecosystem. One of the segment which has been not catered to well or neglected is the younger generation who we call millennials. They really like to be in a premium and luxury ecosystem. Even if they can afford, they really don't want large spaces. They want efficient, smaller spaces. So we will need to start catering to those segment well in terms of products and in terms of amenities and the services which is customized to their need.
Okay, good to know that, that's really going to be the target audience. And give us a sense as well as to what the outlook is when it comes to inventory levels, because reports seem to suggest that this as well is going up. What are your views and how is it impacting your company?
See, if you for us at Max Estates, just to give your audience a bit of perspective, we started the journey in 2016 with the philosophy of live well, work well, started with commercial office, established a strong track record of premium and quality, and moved into residential with two back-to-back launches. So from our perspective, if I look at from our perspective, we see a very, very positive outlook in terms of consolidating and growing our position in Delhi NCR from a booking value of 1,800 crores in FY24, moving to 4,800 crore that we have revised our guidance to 4,800 crore in FY25 from Estate 360, and another 700, 800 crore from phase two of Estate 128. And we would like to build on this trajectory through an acquisition of almost 3 million square foot per year. And for us to deliver on that, the capital has already been secured, balance sheet is pretty strong to support that. So we see a very, very positive outlook for Max Estates moving forward, both in residential, commercial. As far as overall market is concerned, please keep in mind, Delhi NCR had inventory levels in terms of number of months, 75 plus at one point in time. With what we have seen over last few years, this has come down to 15 to 18 months. Two things are going to happen. In Noida, where a lot of projects were stuck, they are getting turned around. And Noida is going to see more supply. Right now, there is a deficit of supply compared to demand in Noida. In Gurgaon, going back to what I just described, some of these distortions that we are seeing, which is over concentration in one particular segment, will need to be corrected for lower levels of inventory to sustain.
Raj, so good having you today on the show and giving us a color on what exactly is happening within at least the North real estate market. Good speaking with you and wish you festival greetings from all of us.
Thank you so much. Lovely to be here.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.